What if I told you that Elon Musk once borrowed billions without selling a single Tesla share and legally avoided capital gains taxes while doing it? Sounds like a cheat code, right? Like a Wall Street version of the Infinity Gauntlet, but it's not sci-fi, it's tax code. Welcome to the legal wizardry of prepaid variable forward contracts. It's a mouthful, but here's the magic. You pledge your stocks, get a loan today, and promise to maybe, just maybe, sell some shares in the future. Maybe. Meanwhile, you've got billions in cash, Uncle Sam gets nothing, and your accountant just cast invisibility on your tax bill. Let's back up. You're a tech billionaire sitting on a mountain of stock you don't want to sell because if you do, boom, capital gains tax. We're talking 20%, maybe more. That's tens of millions vaporized instantly. But you need cash for what? A yacht, a rocket, a private island, buying Twitter, whatever. Enter the Prepaid Variable Forward Contract, or PVFC, the finance world's version of don't ask, don't sell. Here's how it works. You go to a bank, Goldman, JP Morgan, someone who plays in this league, and you say, hey, I've got these shares, let's make a deal. The bank says, sure, we'll give you cash up front, and in a few years you might give us some stock depending on the price. Boom, cash in your pocket, but no taxable event, because technically you haven't sold anything. Now you might ask, wait, how is this legal? Well, that's the beauty. You didn't sell your shares, you pledged them. The IRS can't tax a sale that never happened. And when the contract ends, you may settle with cash or give up some shares. But by then you've likely restructured, refinanced, or vanished into another loophole. And it's a financial dance with just enough steps to avoid tripping the tax wire. No taxable gain today, and no gift tax because nobody's gifting anything. Just a forward contract. Forward, like the future, where your money multiplies while your taxes stay frozen in time. And don't think this is some backroom trick. It's all out in the open. SEC filings, financial disclosures. Musk used it. Zuckerberg too. It's not a loophole, it's a limousine lane through the tax code, and billionaires have the fast pass. Meanwhile, regular folks are selling grandma's jewelry to make rent and reporting it to TurboTax. You think that's fair? Of course not. But it's legal, and legality is the name of the game. Want to know the real kicker? These contracts can even be re-upped. That's right. When the term's about to expire, you can just roll it over into another PVFC. Like refinancing a mortgage, only this time you're refinancing reality itself. The IRS, still waiting, still hungry, still empty-handed. So while you're out here counting receipts and clipping coupons, the ultra-rich are using contracts that sound like Hogwarts spells to fund private jets without selling a dime. It's not evasion, it's optimization. It's the difference between oops, I owe taxes and surprise, I borrowed $1 billion. And here's where it gets even slicker. The collateral, the stock, might rise in value during the term of the contract. So not only did you get cash up front, you get to ride the wave up, tax deferred, all while sipping champagne and watching your rocket launch. Now, I'm not saying you can pull this off with your 17 shares of Apple stock. This is elite tier finance. But knowledge is power, baby. And the first step to fighting back is knowing the game. Because while the tax code might look like a wall, for the rich, it's a maze. And every billionaire has the map. So next time someone says, the rich don't pay taxes, remember, they don't have to. Not when they've got tools like prepaid variable forward contracts, turning tax liabilities into mere suggestions. Smash that like button if you've ever paid capital gains on a couple $100 while billionaires walk away tax-free with billions in hand. Follow for more legal hacks, financial sleight of hand, and the loopholes the rich pray you never find out about. Better call Saul.